all private, multiple expensive renewals, fees on fees. Like, we've been through the ringer with the financing. We actually just closed our refinance with RBC yesterday.
Nice.
With RBC?
Yes, we got
RBC.
Tell
us first, what's that trailer park? For people who doesn't know, what does that mean? Because a lot of people think like trailer park is like very C class, D class, don't want to touch it and all that, right? It's only more popular in US, right?
Trailer parks are a great investment. If you ask me what I thought was like one of the absolute best long-term investments, I'm thinking trailer parks. Welcome to the Wealth Busters podcast. I'm Andrew Hines. I am not your host. I'm the guest today.
He is a podcast host, burr professional, and coach.
Cody and Nada are going to be asking me some questions, so be sure to tune in.
What's keeping you busy nowadays, Andrew?
Well, end of the season for the camp and the resort. And so we're kind of making plans for next year. My son keeps me very busy. My podcast and media side of things keeps me busy. And transitioning some of the stuff I'm doing in Florida also keeping me busy. So I got a lot on my plate, as you know all about that. So
So why not we break it down one by one?
Sure.
The kids side.
Yeah.
What does that look like? Tell us a little bit about that. How that work together with all these.
Having my son?
Yeah.
It's like the best thing ever. And he's in this stage right now where he was laughing hysterically when I came home last night. So we had a lot of fun. It really brightens my day. So keeps me up at night a little bit. You know, he still comes into our bed, for half the night and kicks me and stuff. But it's all worth it. My wife and I are on the fence. We want to.
You want another one?
We do. We want to get him in his own bed first.
Yeah.
But so that changed everything. Yeah, my son was the greatest catalyst for change in my life.
What do you mean by that? The greatest catalyst of change?
Well, because it broke everything I used to do. Because everything I used to do was so self-reliant. I relied on myself rather than a team for a lot of stuff, a lot more than I should have. And then when I realized that I was at capacity before he was born, and then he came into the picture, it's like I have to tear everything apart and rebuild it. And that's when I really started hiring and delegating more.
Okay.
I've made several key hires since then and expanded multiple businesses since then. Nice. And I feel a lot more authentic as an entrepreneur and business builder than I ever did before, because you have to realize what you can't do.
Yeah.
And
we thought we were invincible.
I thought I needed to do everything because, let's face it, as an entrepreneur, you feel like I could do it better.
Yeah.
I could, why explain this to somebody when I can do this myself?
Yeah.
But I hit a point of burnout with all that. And now I'm the complete opposite. I would rather spend 2 hours explaining how to do something to someone if I know that they'll be able to repeat it. And, then I'll feel accomplished. I get a feeling of satisfaction knowing that I've taught something, created a process, eliminated something from my weekly schedule. So if I can spend that 2 hours today and not have to do it again next week and the week after, even if it was only 15 minutes each week, I'd rather spend the 2 hours today.
That's the ROI, 100%.
Yeah.
Now you have more time to hang out with your kid, get to see them grow. Like that's like a common thing I've heard is like the second someone becomes a parent, it's like you value your time 10 times more because it's not just your time being affected, it's your kid.
And I'm out of the house usually, I'd say between 9 and 10 in the morning, and then I'm back home for 5. So I have very limited time in there to do much of anything. So coming out here, you guys, you must have twisted my arm somehow. So it's really put things in perspective for me.
For sure.
I can relate though, because I remember first year I quit my job. I started all this YouTube video, started teaching me about personal investing. If you guys haven't followed my YouTube channel, on top of the Wealth Busters, go to Cody Ye Investing. Click that like, subscribe. Anyway, but first year I was making the most amount of net money, stupid money. And then coming second year, I started hiring. And I thought I was going to work less, but I ended up working even more. Because I was struggling at training people, finding the right people. We have a 50% turnover rate because we have such a high standard, right? And I think both you and I went through the process of adjusting our expectation. If someone can do a 70 or 80%, that's already really good because we know what we're doing. We've been doing it for years.
Yeah.
So if they can do 70 to 80%, keep them.
Yeah.
Pay them well.
Yeah.
Right? And all that. So I think we went through all that, and now we're expanding in different business. I think, kudos to you on breaking through that cycle, because a lot of people just give up, right? They have a small team and be like, you know what, this doesn't work. Let's break the whole thing, fire everyone, and then just start over.
Yeah, don't let perfect be the enemy of good. Yes. You know, like that's a big thing. And I knew these things at a conscious level. It's just in the forcing to make change. Sometimes you need a catalyst.
100%.
And that happened eventually.
So the sun is the catalyst.
Far too delayed in coming up with that. But I will say it's empowering once I see it work. It's just like, okay, who's my next hire? I'm always thinking like, how do we find somebody to do this? Anything I do that I can explain, I want somebody else doing it.
100%.
It's the things that I can't explain, that like being here, I can't have somebody do this for me. These are the things I'll do.
This is Andrew Hines AI generated face right
fake.
here.
Until we can train AI to, not happening. Yeah.
Yeah. So the sun was the true catalyst of really, instead of shifting from self-centered to more of thinking about what's the highest and best use of your time, right?
Yeah, everything is that way, right? And so, if I can earn, 500, 1,000, 10,000 an hour doing certain endeavors, real estate focused or what have you, if you equate the time, what am I doing a job that I could pay somebody, 30 or 25 for?
100%.
Mm-hmm. That's good for you. We're going to take a shift on the family side of things to the trailer park, right? I think we're chatting about that 2 years ago. You guys were starting with Zach and with
Zach, Mike, and Jake.
Mike, and Jake. So, how's that journey been? And if you guys look back, will you guys do it again?
That's a great question. The journey has been insane. It's true business building. It's a business tied to real estate, and the amount of work.
Tell us first, what's that trailer park? For people who doesn't know, what does that mean? Because a lot of people think like trailer park is like very C class, D class, don't want to touch it and all that, right? It's only more popular in US, right?
Trailer parks are a great investment. First off, like this is not a conventional trailer park, but if you asked me what I thought was like one of the absolute best long-term investments, I'm thinking trailer parks, because there's such low operational involvement. And a very, very basic asset, very available. Like think about like the class of people who can afford to rent trailer parks. When no one can afford a house, they can afford a trailer. I mean, you're so recession hedged, I'll say, with that kind of asset. That being said, that's not what we have.
What kind of trailer park do you guys have?
I wouldn't really call it a trailer park. It is a campground that has trailers. It was run originally as a camp with a lot of seasonal trailers. So they had, I think, 28 seasonal trailers. And these were people they paid like just less than $2,000 a year to have their trailer on site, which when we bought it, we paid around 1.5 million. We're running these numbers backwards. We're like, there's no way we can continue with any of that. So that was one of the first things we did, to give them all the unfortunate news that we couldn't continue with a seasonal rate.
Yeah.
I mean, we could have come back to them and said, hey, the new rate's
happened then?
$10,000, but that wouldn't have worked.
No. Most people left?
Some reluctantly. Some we bought their trailers. Some we just said, hey, like your trailer's wedged in there. It's going to be very difficult to move. Do you want to just sell it to us? So some of them we repurposed their trailers and actually made them into glamping trailers. Nice. So one of them, we painted it, we call it a shipwreck, and we painted it like a Tobermory scuba diving scene. And in the inside,
cool.
Yeah, because Tobermory is known for scuba diving. Yeah. So the inside's all themed with the blues that match the outside, and we really try and do a lot of that where it's this really picturesque stay. Yeah. It's something that you would Instagram. Our most popular thing is our glamping tents. And we'll get people doing yoga poses on the deck in front of the tent and Instagramming it, and we'll have people propose to their significant other at our tents and Instagram it. So we're glamping. That's really our core focus. And what we've slowly done is we did offer regular camping, and we still do, but we've scaled that back significantly. So first year of operations, camping was about 50% of our revenue. This year, I think it'll come in somewhere around 10%, something like that. 15 to 10. So we're really scaling that back, and probably within another 2 years, we won't offer that at all.
Wow.
Why is the decision for that to drop it from 50% camping to 10 to 15 or eventually none?
Yeah, the reason for that is really just acknowledging what we're good at, what we can offer and what we can't. We're not on a lake. We have a little pond. We don't have a kids playground. We really just don't have what a lot of families who generally it's families that want to camp in the area want.
Yeah.
So I shouldn't say we'll completely get rid of it, because we're open to just a repositioning. We're not a family campground, which sounds funny to say. Like, we're not. Everyone's a family
Adults
campground. But that sounds X-rated, so we're not going to say that. So we've been playing with this, but one of the things we did this year was just get rid of family in the branding. Of course, we have a sign out in front that says family. And my designer, when I told him that, he's like, "That sounds like suicide for your business." I'm like, "No, trust me, we've really thought about this a lot." And one of the problems we've run into with regular campers is they come with expectations that we can't fulfill, and when we don't have them, we get torn apart on the reviews on Google. So one of the problems that we were having is people just wanting to party. Well, our glampers, they're coming for a quiet and peaceful stay. Yeah. That's what we offer. We offer this very nice nature-based peaceful stay, quiet camping, grill and chill, as one of our managers. Grill and chill. Our manager likes to call it that. And we were just finding a lot of incongruence with the people who were coming on to camp. And this place was a party central place before we bought it. It was an anything goes party place, because that's what the previous owner seemed to think was his angle. Yeah. I'm not really the best family campground. I'm not on a lake. I've got really cheap seasonal spots, and then everybody else coming in, anything goes. They had group camping, 50 people up to 50 people on one site. What are you going to do with 50 people on a site other than cause trouble?
Seriously.
So that's where we found ourselves. And our first year was friction. We had a lot of friction, and even the second year. And the second you tell these people, hey, you can't do this on a campground.
I'm gonna cut you there. Yeah. Does your campground fall under any of the landed tenant board, any of the tenants protection?
No, it's a commercial. It's a commercial right? property.
So it's kind of like Airbnb. So you have a lot more running a business.
Yeah. Even the trailers, it's commercial. They're not actually renting the land. Well, they're renting the land. They're not actually renting their trailers. They own their trailers.
Okay.
So that helped us a lot on that front. So I like that a lot. We're outside of those rules. But like I said, we had to kind of look at the way this place was positioned, and all these people who've been coming for years on years. Yeah. All of a sudden now we're the bad new managers that disciplined them and told them that you can't party and scream. And so it's been a process, moving away from that. We've got a really great team. We had as many as 9 employees at the site this year. That's and plus subcontractors and people we bring in to do stuff. And we took our hospitality income and almost doubled it this year.
Wait, hold on, doubling?
Almost doubled the glamping side.
Right? Third year in.
No, second full year of operation.
Second full year.
Yeah.
So,
well, actually, first, I guess you would call it the first full year, because we were a bit of a delayed start. We didn't get our first listings up until June 20th in our first year.
Okay.
Which is technically still before the rush, but that lead time is where you get all the bookings for the people to come. Yeah. We still filled up June and July with our first glamping tents, but this was like, in fairness, like our first full glamping season where we had stuff that was available to rent in May. Not that anyone really does. Like, May is very quiet, June's quiet. July is where it starts to get bumped.
July and August kind of thing.
And even into September, we've been consistent. We even we're almost into October. We've got our weekends booked right up to the end.
Wow. Yeah. And where is this glamping site?
So just roughly about 25 minutes south of Tobermory.
Okay.
Yeah, Miller Lake.
Do you want to tell our audience where that is in case they want to look up?
Yeah, so on Instagram, look up at the Grotto Getaway Glamp.
At the Grotto Getaway Glamp.
Yeah, that's where you can find a lot of our content, see the really, really cool stuff we've got. It's meant to be a memorable stay, and we're really, really well positioned. If you want to check out Tobermory, you want to check out the Grotto, Lion's Head.
Right in the middle.
We're right in the middle of all of it, and I think that's one of the things we bring to the table. Which when new competition is coming in and people asking, "Are you worried about that?" Not really.
Do you guys have competition yet?
Not direct, no. And how could they? Like, they'd have to be in our area and doing the same thing, which we were there first. And just because of our real estate and our location, we're pretty confident in that front. Not to say people haven't copied us; they definitely have. But in different areas.
Yeah.
Not in the same area.
Not in the same area.
So you guys have a really high barrier of entry.
Yeah. You got to be able to buy, because you can't do it in your backyard. Yeah. Like, zoning won't allow it.
Yeah. So zoning is one limitation. won't allow it.
And then you have to buy the land, and I don't think you get like a mortgage for it, right? If it's just a plot.
It's really hard to finance.
Yeah.
How do you guys finance that?
We were all private. Multiple expensive renewals, fees on fees. Like, we've been through the ringer with the financing. We actually just closed our refinance with RBC yesterday.
Nice.
With RBC?
Yes, we got
RBC.
They approved us on projected income. We didn't even we couldn't service the mortgage based on our existing financials. That's what they thought of our business. So actually, that's one of our biggest confidence builders is what RBC thinks of us. Yeah.
It's like an ultimate seal of approval.
Yeah, that's a pretty big seal of approval for us. Yeah.
Because RBC is an A lender. Yeah. And RBC, like for people who doesn't know, they only do like up to 4 or 5 units for student rentals. Yeah. And all that.
Well, we're on their commercial side. Yeah.
They're on the commercial side. Okay. Yeah. Okay. So, have different criteria, but still a good confidence builder for the top bank and can't to give you guys on the projected income. What do they look at? Do you mind sharing?
That's a great question. I mean, they obviously ask for everything. It's RBC, so they look at all us, our personal net worths, credit. They look at the business financial statements. We have an operating company and a holding company, so they wanted the consolidated statements, just to kind of show the relationship, because the holding company really is just a holding company. Yeah. So technically, its income is rent. So our Grotto Getaway brand rents from our holding company. So they wanted all that stuff. And they wanted, obviously, projections, which we worked with a broker who kind of helped with all that. But, I originally had presented it to the broker. I'm like, here's what we're doing. Here's how our expansion is going to look next year. They're like, no, we just want to work off of your existing units, none of the expansion. Well, we did the expansion anyway. Yeah. So I was already on the email with the lady. I'm like, so I just got word that we closed. Now let's talk about how we're getting more money to expand.
That's amazing. How long did that whole process take?
We started like probably in the early spring, late winter. And then we told them, because we had to pay out a second, we told them we wanted to wait until the fall when we were at the end of our season, where we were in a better cash position 100%. to pay out the other mortgages.
That's amazing.
Yeah.
Sounds like a crazy project, but is it profitable at the end?
We haven't had a profitable year yet.
Okay.
But that's because of the aggressive expansion.
Yeah. When it stabilized, what is the numbers that you guys are looking at in terms of your famous ROI sheet or whatever? How do you guys do that?
Well, we're working to get it to $1 million in revenue
per year.
Yeah. So that we're probably another 2 to 3 years off of doing. And
is that gross or is that net?
That's gross.
Mm-hmm. Okay.
Yeah, that will. I don't have the projections on me, so I don't want to misquote this, but at an operating margin of approximately 70%, that's going to put us into a valuation based on our appraisal of around 10 million.
Wow.
At an 8.5 cap, which our appraisal was at. If we go at a 10, then we're somewhere around a 6.6 million value on the property. So those are the kind of numbers that float around in my head on a regular. Next year, I think on our projection, if we don't expand more than like a couple of units, I think we're looking at about 150 profit. And
when you say it goes up from there, what does that mean?
Expanding more
site or
more sites.
What does that mean?
Yeah, we have 28 active listings on our. So if you go to
all like different boxes. Trailers,
different sites, right? So different sites that are available on grottogetaway.com for anyone who wants to book. You can obviously find us on Airbnb as well, and booking.com. So this is the beautiful thing about the zoning, the opportunity here, and why we wanted it in the first place is the scalability.
Yeah,
because you can take a site. Like say you buy a house, you want to turn that into an Airbnb. Great, you have one Airbnb unit and you have no means of expanding that, like not legally. Whereas with this site, Jake and I had specifically been talking about that exact fact. I'm like, I don't like the thought of owning one Airbnb. I want to own 100. Then it's worth paying the people, building the infrastructure. Yeah. And then this site popped up on his radar in the fall of 2021, and we're like, oh, okay. So Tobermory, we knew the area, and we knew that, there's a big Airbnb demand. People were making a lot of money, especially during the lockdowns up there.
Yeah.
It's since softened. But
I heard that a lot.
Every Airbnb. Yeah. But we like the idea of scalability. And for us, there's no permits involved in adding a deck and a tent, adding another trailer. We're bylaw approved. We have a letter from the municipality for 70 sites.
Wow. So you're only 28 so far. Yeah.
Well, we're 28 plus the regular camping.
Yeah.
But as we phase those sites out, we can repurpose them. So we have 90 acres. We can cut into forests. We can make new sites. We just have to retire the old ones and not exceed our 70 approved. So the fact that there's no municipal approval process for us to throw up a new tent that can, like, our best tents are like $25,000 a year in revenue, like including HST.
Wow.
So net off the HST, we're still over 20.
That's no utilities, like very minimal utilities. Like
no, we have staff.
Yeah.
But that's pretty significant. So if we can add, and they're never going to do that in their first year. It takes, you have a year of
phase 1, phase 2.
Your year 2 income. Like that's what we're kind of like, our best performers in their year 2 are doing that. Our new performers, stuff we launched mid-season, we're seeing like $7,000-8,000 they generated this year, which is still almost
covering. What do you
mean
mid-season? What's mid-season? So just taking a break here. If you guys want to earn consistent cash flow through our Said and Done strategy, we're hosting a boot camp on December 16 and 17. It'll be virtual. I'll be giving away a lot of my secrets for beginners who has never been in stocks, get you all the way into stock option investing and our Said and Done strategy. The strategy has been featured by TD Bank of Canada. And definitely stay tuned and follow me on social media. We'll get you more information.
Like say we don't even get it listed until July. Yeah, that's like, we're cut off at the legs there. So we're still going to get bookings. We'll book right through until October, but people want to see it. First off, your reviews or your ratings don't even show up until you have 3. So, we have to wait to get through that. And then from there we can actually have more confidence in people. We have stuff that has, like 30 reviews and we have a 5-star. So crazy. Those ones do really well. Like we have one called The Romantic, and I think the themed thing really works.
What is it? What is a romantic theme?
So Pauline, one of our managers, came up with the idea and just like called it The Romantic. And I could not even describe to you how she's decorated it. It's nice.
Try, man. I'm really getting
women seem to like it. It works really well. So men who want to propose to their women will book it, and men. So it does really well in just getting booked, because I think people think, oh, that I want to take my girlfriend there. Or they see some of the photos, so we just book up like crazy.
Very aesthetic.
And then we have other themes that haven't performed as well, and we're like, okay, so do we need to change the name? What do we need to do? So it's constant, like adjusting, watching what's happening. I wouldn't just like recommend this business for just anybody, because like there's 4 of us very business-minded people like pulling the strings here. And we have a really big team.
How do you guys break down between 4 of you guys?
Yeah, I'm pretty much like the money guy, CFO sort of role.
And with your background high level, too, right? You have strong.
Yeah, people call me the numbers guy. I don't think I am, but I mean, I'm very capable of numbers.
Excel guy.
I'm very much like a common sense thinker. I think of myself as like, I like to ask questions. I like to follow a logical process. And I think that I'm decent at getting the best out of people and trying to work with people and finding out what they're good at and how they can be a part of the team. So those are the things I try and stay focused on. So I deal with our employees a fair bit. My big thing, anyone ever asks me in dealing with just about anything, and I'm very reasonable. I will be reasonable with you about this. And I live by that. So I handle that in our organization. So Mike will handle a lot of the technical stuff, hands-on mechanical stuff.
Is he up there? He's from Mississauga.
No,
right?
Mike's from down here, but if we need help with something, we need to source new equipment, Mike's the guy, because he has a mechanic background. Jake is, realtor, negotiator. So he fills in a lot of the in-between stuff. And then Zach handles a lot of our Airbnb. He handles the entire Airbnb back end. I have it on my phone, so I'll see some of the stuff that happens, and he has his VA in there. And so I am, I'm aware of what goes on, and sometimes I'll respond to stuff. But I usually just leave it for the other people to do.
So
still transitioning to delegating. It's work in progress.
I mean, I don't need to. It's just if I see something, and like early on in the season when the bookings are rolling in and we see the money coming in, it's kind of exciting. So I kind of like to get involved. And then I'm like, okay, I'm good. You guys take it from here. You guys take it from here.
So did the game plan change since the first day you guys bought it until now? the game plan change? What do you guys have an exit plan?
Yeah.
Like, what are you guys planning to sell? Because I heard you were doing the multiples on the cap rate. And what's the plan there? Are you going to sell to private equity or what's the game plan?
We're going to be raising an LP. That's our plan. Nice. That is a change in plan. We were originally just thinking keeping it internal, but the financial outlay for this has been pretty significant. The amount of our time has been pretty significant, and I think it's the natural next step. So we bought another site this year, and
similar.
That one's a cottage resort on the water, actually closer to Tobermory proper. The address is actually in Tobermory. You guys are taking over
Tobermory, eh?
Yeah, we're sort of doing that's our niche, right? So we're going to be doing something. So stay tuned for people who wanted to get involved in this, and we're going to be offering a limited partnership where people can actually buy units in it. And it'll be an expansion, so we'll be adding more units, more really cool stuff that requires a little bit more of an investment, but we know what we can do. Like we follow what's happening on Airbnb quite a bit. Who are the top performers and what type of thing do you need to do? Like we've got the location, so it's a matter of we've still got another 40 plus sites we can add, and what are we going to do? So that's why we're going to end up phasing out the camping in a large part, is because we'll be using those sites.
Better ROI.
Way better ROI. Like a single campsite cannot generate $20,000 in a year.
And more innovative.
But a glamping site can.
Right. And the millennials are looking for that. The experience, right?
So the cool thing for us is, obviously recession fears are a consideration for a lot of people. Like we consider ourselves a very affordable vacation. Like
how much is it per night?
You could be anywhere from $200 on the tents. Of course, the shoulder seasons are cheaper. To like our trailers, start usually around $300 a night in the summer.
Oh, that's not bad.
So I mean, if somebody was thinking about going to Greece, maybe they vacation local, you're going to get a really memorable experience. Yeah. So we don't position ourselves in terms of like our advertising as like cheap. Like we don't want that because we think we're an incredible value. But I think that we also have that angle if we ever wanted it. Say, hey, not gonna go to Europe this summer. Why not vacation local and and have yourself a very memorable experience. So that would be kind of our messaging going forward as people kind of tighten up the purse strings a little bit to keep that rolling.
That's awesome.
If you can build this business again with 4 of your partners, would you guys structure it differently? Because like the reason I ask is, my fiance Claudia wants to get into the Airbnb arbitrage because we have some success there. And for me, I'm thinking, hey, I'm just going to go hire a COO or partner with someone that have already done it. I have things that they need from me that they, raising capital and all that. I can come in and bridge that gap, right? But our goal is to exit, have an exit plan. Maybe we never exit, but we build it as if.
You always build as if
someone's going to buy it. So we're going to go talk to those people want to buy it. What do you guys want? So we built it towards that from the beginning, right? Is there...
I don't think we were thinking that from the beginning. We were thinking we could turn it into something with monster cash flow, and we were all very ecstatic about that idea. Now, more recently, we've said, okay, well, regardless of whether we're keeping it or not, we are going to progress with a proper structure and a proper valuation so that, at very least, we have the option of selling if we want.
Yeah.
And that's the track we're on. So if I were to do it again, we would have started with that thinking earlier.
What would that look like?
Well, we would have ended up. Well,
you know what? Site, right?
I say that, you kind of need some proof of concept. We needed at least that first year. So it really would have probably just pushed this decision forward maybe 6 to 12 months, something like that. As soon as we had the financials from the first year, we would have been working on it. Hey, here's our proof of concept. We've shown what we can do. Now here's the expansion plan. We could have done all that then. So we were pretty much a year behind where we needed to be in making that decision. But with that said, it doesn't really hurt us to be 1 year further along. That much more proof of concept.
100%.
So it's just we know we need to bring in operations management. Sorry.
Bless you.
I usually sneeze in 4s, so as my wife says, okay, no, we're good. So we know we need to bring in some operations management, and that's been something where we had some ads up, and we've been on a little bit of a holding pattern on pulling the trigger on a hire for that, because I think we'd like to get this GPLP thing sorted, structured, and then that's the next step to really push the growth, because we know just how much could be improved by take any one site. what can we do to this site to make it pop, to make it better, to give it more unique, utility, right? More unique. And if somebody were to be focused on that kind of thing, we could easily squeeze, you know, I'd be shocked if we couldn't get 25% more out of each listing they focused on. So, you know, what does that work out to mathematically? That could cover their salary. 100%. So this is the kind of thinking, and it's just about manpower, woman power. Like we need
and
more
the talent too, right?
Talent, yeah, of course. They've got to have an eye for it. Like Pauline on our management team, she's great with that stuff, but she's also doing a lot of other things, overseeing the cleaners, doing some of the cleaning herself, setups, takedowns. She runs that whole show. So we need more of that.
Yeah, 100%.
And that's where having the plan and having a line item to pay that salary was something I would have done earlier.
Yeah. Now this question might be a little bit out of the left field, but is there a part of your long-term vision for this to have like maybe like even opening up a business? Because thinking about it, like you guys, let's say you rent out all 70 plots and you open up like a restaurant or something nearby, like that right there is a self-sustaining client base. So right there, like a successful business right there.
Well, we already have a restaurant space on site. The office is actually it's like office and restaurant next to it. We rented out the restaurant the first season and then had some disagreements with the tenant and actually paid to exit the lease.
After at least you can do that easily.
Yeah. So we decided that it was just not worth our mental energy at the time. However, with the proper team to oversee that decision could change. And I agree with you. Like that's a huge thing. We'd love to bring that for our guests. We'd love to be able to offer that to them. Right now we have some options that are about 10 minutes away, but having something right on site would be amazing.
Yeah, 100%. Cool. That's pretty cool.
We're going to take a segue here. I'm going to look at that camera. That camera is going, right, Janelle? I'm going to do a quick CTA on ask me people like, share, and all that. So if you like this podcast so far, you guys know that we don't run ads on it. And we are trying to bust all the wealth myth on this podcast. So if you like and share or share with people that how you originally get to listen to this podcast, make sure you do that. And if you like it, give us a 5-star review. We wouldn't complain about that. Now let's get right back at the podcast. So Andrew, you have a meetup going on every month. Can you tell us more about that?
Yeah, Jake and I are my brother-in-law Jake. So we host a monthly meetup just for, we call it GTA West REI meetup.
Where is it?
Yeah, it's in Burlington. Okay, I guess actually technically Hamilton, like Carlisle area. We host it at what's it called, West Ave Cider. So they're nice enough that they don't charge us. We keep the event free. Just give people a chance to meet up, talk to each other. We don't do presentations at the moment. I've done some other stuff like that, but that's
pure
not
networking.
This is just pure get together, chat, meet face to face, and kind of build stronger connections with people. I always liked that. That was the thing I liked most about networking is like I'd go to like the Right Club and what have you, and the presentations were my least favorite part. No slight against them, but I loved talking to the people in the hallway, between talks. So that's what it all. That's where that came from. So I used to host it before all the lockdowns and stuff, and we had it up to like 100 people, and obviously shut down for multiple years, and then got it started up again. And it's smaller now, and I think the biggest reason is the current climate around real estate investing.
Yeah.
Is it used to be sexy, and now most people who know somebody who's in real estate investing, they know a sad story.
Yes.
So I don't know if you guys have noticed it, but I've noticed a change in mentality about real estate investing, and the people who were on the sidelines thinking, "Oh, that looks so cool, I want to do that," aren't really doing that.
No, they're following the trend with the market. Now we're at a low, and so everyone just has a hesitance with it. And they're just like,
So the enthusiasm around it is a little lower, but the positive of that is the people who come out to the meetups are pretty serious. And it kind of just weeded out some of the people who really weren't that serious about it. So actually, I've really been enjoying these meetups and talking to the people. We just had one last night.
Oh, nice. Yeah, it's very interesting because even in the stock world or business world or real estate world, when the market is going up, when everyone's making money, and everyone is very excited about it and they want to learn about it, they say, we're going to do something, and they chase the high. But when the market kind of turn around and weed out a lot of the beginners or people who over leverage, now the people who originally said they're going to do something end up being more frightened and end up not doing anything. But this is where the opportunity is, because from what I see, I don't know why you see it. Stock market, same thing. I think we're going to have something happening. Real estate, a lot renewals are coming up in Canada. residential side, commercial side. 100%. Some of mine already got renewed, so double the payment.
I'm looking at that's going to force a lot of people to sell. So
I'm looking at it, I'm like, it doesn't make sense.
Yeah. There's a lot of opportunity. Like I'm one of those people who I think there's opportunity always. You have to adapt to a changing market, but there's always opportunity. And for people to just check out, I get it. It's harder. Like you could be completely incompetent and buy a property and win. Yeah. That day is past. Like that's not the way. So there is a bigger barrier to entry because you really got to know your stuff. And you got to make very well thought out decisions, which probably why coaching is seemingly very popular these days. Yep. There's, because you gotta know what you don't know.
100%.
And that takes time.
Yeah. And that's why now more than ever, networking properly is like the most important thing. It's like
network with people, find out what they're doing. Like we both see, where people are going. I know a lot of people talking about going out west, out east, and down south.
Down south. Yeah. Tell us about down south. I know we have a few minutes left, but I know at one point you were thinking about moving down. Yeah. You did it for a little bit. But now you're back here.
We've spent some time. Every year we'll spend some time down in Southwest Florida.
Yeah, you were talking about getting a business visa, E2 visa.
Yeah, we were working on the E2 visa.
Are you guys still working on it?
It's an open-ended application. I have the deposit with the lawyer, but we kind of put a pin in it when we found out my wife was pregnant. And then we kind of just decided we didn't want to be away from family while we had a little one. And so it was more, okay, I'm just going to keep building the business and we'll worry about the E2 at another time. Yeah. And that's kind of still where it's at. I can still do everything I want to do down there at the moment without it. Mm-hmm. So E2 is great if you want to move your tax status down there, and then you don't pay these ridiculous Canadian taxes.
Mm-hmm. Speaking of taxes, because I know someone personally, when they would think about moving down to the States, they're Canadian. They end up moving to Mexico because they have 50 corporation under their personal name. Yeah. So they say, Cody, if I move down to U.S., there's a lot of $250,000 extra per year. Yeah. Just tax
filing requirements and stuff. Yeah.
So why? Is that a benefit
I got some of the feedback. I've simplified a lot of my ownership since I liquidated a lot of my Ontario stuff. So I did get into this conversation a little bit with my accountant. Yeah. It didn't sound like it was going to be a deal breaker, but it was going to be a bit of a pain. Mm-hmm. But if you just think about the fact, like in the States, it takes like 5 times as long to get to the top income tax bracket. Yeah. The top income tax rate is much lower. At least if you're in a state, state where there's no state tax, like state of Florida doesn't have state income tax, Texas doesn't. There's other ones that fall into that category or have low state income tax. Yeah. So, there's a lot of ways to make that feasible. And then the biggest thing is just the deals in general are better on average. Like you can find a lot of cities, a lot of places that the deals just still work. Mm-hmm. Whereas in Ontario, not so much. There are other provinces where you can go. And of course, like that's on the table too. Yeah. But I was already spending time in Southwest Florida, and so I started building houses down in Cape Coral, and buying up land and going through the building process. The numbers worked initially, but as values kept coming down, they've stabilized. But it's kind of like Ontario, it's kind of stagnant, and then the build costs went up. So the margin just got to a point where it got squeezed too much to make it feasible anymore. So at the moment, I'm kind of just. Everything's for sale. I just sold one of the last houses I built, and the lots are for sale. And I'm kind of focusing on some other stuff. I'm still going to be doing stuff in Florida, but just that specific strategy, time to pivot, right? And that's all. That's what it's about. If you're an entrepreneur, an investor, you got to know when it's time to pivot and not hesitate on that stuff.
Rebalance, 100%. Mm-hmm.
So you run a podcast on your own, right?
Well, I host it on my own. There is a team effort there. I don't edit it on my own. I did start that way, but I don't do that now.
Yeah. And what does your podcast focus on?
It's real estate first. So anyone who comes on, sort of the agreement I have with my audience is that they'll be a real estate investor, but they may also do other things, entrepreneurship, a lot of entrepreneurs. And I think real estate investors are entrepreneurs if they're true to themselves. Yeah. So we talk business building, development, obviously real estate, what's working, what's not. We go through case studies, we run numbers, cut through the BS, so to speak. And I also have another show called REI Hot Seat, which my brother-in-law and I host. Yeah. And we do deal analysis, live active deals in Ontario usually.
Multifamily, like bigger than 10
multifamily
units kind of
usually 6 units a lot and up, like that kind of thing. Just assessing what's working, because people are still buying. So what's working? How are they doing it?
Yeah.
We're asking those questions. Still finding creative ways that you can make cash flow and create deals in Ontario, because it's not like it's impossible. Yeah. And some people are just going to want to invest here regardless.
Yeah.
So that's sort of the theme of the show. And I'll occasionally talk about my Florida stuff, but I'd say Ontario is the majority of it.
And is there a myth of what's the minimum of units in Ontario that have to be above that for the cash flow to start working? Have you guys worked at that number?
I haven't come up with a number, any such number. I'd say generally speaking, 6+ is just where the focus has been. I think if you want to scale your time, go more units. Of course. But every deal, you got to look at it on its own. Like, what are its merits? We were looking at one. It was in, I think it was in St. Mary's, and it was 6 units existing, but if you looked at the property, there was multiple garages that could be converted. There was like an eight car garage that had separate bays, so you could rent each one of those out. So the opportunities to make money on this thing were just like ample. Yeah. And the construction of the building was incredible. So to just paint it with a broad stroke wouldn't really make sense. You look at that deal and its merits, there were ways to turn that into a perfect BRRRR.
Yeah.
Which, anyone who doesn't know, that's when you like refinance all your money out of it after you get it rented. So that's the kind of thing where we're just talking creatively and hoping that people who are listening start to get some of those skills, the ability to look at a real estate deal and not treat it like a commodity, but treat it like an opportunity to create value.
100%. Not setting limits based on how many units are existing, but being able to get that creative aspect.
What can I do here? And I've always sort of approached real estate that way. 100%. I've always been a value add guy, to my own detriment, because it's slow. So I'm working on that. I want to find faster turnovers.
Hey, slow and steady wins a race.
It does. Yeah, it does. That's true.
Cool. So I think before we go for kind of like a conclusion on that.
That's a good question. I mean, I like the organic conversation, as I said. So no, I'm good with this. I think that if you're looking for some wisdom, don't get caught up in hype. Like, don't get caught up in negativity and what people say. Weigh feedback you get from people. When somebody says, "Oh, don't invest in that," you're going to lose. Like, what are their qualifications to tell you that? I think now more than ever, there are people out there crushing it right now. And then there are also people who are tail between the legs hurting. So choose who you want to take advice from wisely and weigh any feedback you get. Don't take anything anyone says as the law. It's about making your own conclusions based on the evidence you find.
100%.
I just love that wisdom. And truthfully, when there's uncertainty happening or we're projecting a recession happening, if it's not happened already, this is where a lot of big time investor or business owner double their net worth from my own net worth.
Sure.
This is when we double down. We put our head down to work when everyone is afraid, and we come out from this recession and double their net worth.
Be greedy when others are fearful, right?
I was just thinking of that. 100%.
Yeah. Warren Buffett done it multiple times, and I know people in private equity are doing it, in restaurant business, like in real estate, they're doing this.
Well, if you think about us in hospitality at a time like this, doesn't seem like a good idea.
But when you position yourself correctly and you're still carrying with amount of reserve and cash flow, imagine when the rates start coming down, people have more money to spend. 100%. You guys are well positioned and ahead of the game.
Yeah. It all ties into being comfortable, being uncomfortable, because chances are that's going to help you grow.
And not being a victim of your circumstance.
Yeah, 100%.
Just because the economy's a certain way or this is, the industry's a certain way doesn't mean you need to be average.
Exactly.
You could still be outstanding against the average and be very successful when others are struggling.
Be the exception, always.
I think that's a good way of ending it. Be the exception.
100%.
Here we go.
That's the quote of the year.
Yeah. There you go.